morning traders, and welcome to this week's Forex Focus, the show where we look ahead at the opportunities that could be setting up in the Forex markets. In today's video, it's going to be quite a short video because there aren't actually that many opportunities setting up. However, we will go through the pound dollar trade that we are currently in and holding, and we'll tell you exactly what we're looking to do with that. And we're also going to cover two other opportunities that could be setting up, but we probably will opt to not take them, and we'll tell you exactly why that is in just a few minutes. So without further ado, let's jump over to the charts and take a look at what we're currently managing. Okay, so the one trade that we're currently in at the moment is the pound dollar chart. Now, we've mentioned this in the videos over the past few weeks that we've been looking to get short the pound dollar because it is in a big downtrend. If we just zoom in here on the daily chart, you can see that this downtrend here, you know, it's been going since last July. It's just been moving down from 1.72. So 1.72 area. It's come down a few pullbacks, but no real major pullbacks. So we did say a few weeks ago that we're waiting for the market to pull back a little bit more. We don't really want to just sell it through the lows there. We want to see a bit of price consolidation, a bit of price acceptance before we get in on this particular trade. And that's exactly what we got. So the market pulled back to a previous level of resistance here. We then sold it on the bearish engulfing candle there, as you can see. So we've been short this from a little lower than 1.54. It was about 1.5389. We ended up getting short. Our stop was above the highs there at 1.5570. And we're initially targeting the lows down here. So we want to see how the market reacts when it gets down to the 1.4950 level. From a fundamental perspective, we believe that this certainly can go lower. Obviously, we need to see what the price tells us. If the price action tells us that it's going to start to stall at this level, then we may consider taking our position off the table. At the moment, we're in a nice bit of profit. We've got more than 2-to-1 profit on the table at the moment, so we've got plenty to play with, plenty locked in there. But we do feel that this particular pair is going to go lower and lower over the coming weeks and months. And our next stopping point, if I just zoom out here, so the ultimate target area where we're looking to take the majority of our profits off is actually towards these lows here at 1.48116 or 1.4800. So we'll see how it reacts to the 1.49 level. Ultimately, we are targeting 1.4800. If it smashes through that level, then of course we will look to hold it. We're not looking to cut our winners short. However, we do want to be able to bank profits, as you know, which is what we speak to you guys about all the time. So as I said, so we're short the pound dollar at the moment. Initially, we're going to see what happens when it gets to the lows. We're expecting it to get through those lows. The next stopping area will be 1.4800. If we get down to there, we'll have more than a 3-to-1 risk reward. We'll have sort of like a 4-to-1 risk reward trade on our hands there, which is very nice. And we'll see how the market reacts when it gets to that level. But that's ultimately what we're looking at currently. The two opportunities that could be setting up for next week, we're not really looking to take them, and I'll explain to you exactly why. So there are two trades that are pulling back to decent levels or breaking out from decent levels. The problem is on both of them, the markets look a little bit erratic. They don't really look harmonic, and the risk reward doesn't look particularly great. So we've been talking about the pound Aussie, waiting for it to come back to this previous level here, this previous level of resistance, which is now acting as support. It got back to that level, but off the back of the non-farm payrolls on Friday, we can see we had a massive spike through this level and then it rejected it. The problem that we currently have is that the risk reward isn't necessarily going to be great on this particular trade. So because we've got a massive spike through the level and then it closed all the way up here towards this sort of congestion area here, we're not able to get in where we would have liked, which is somewhere around that support level. So as opposed to trying to buy in the middle of the congestion zone, which doesn't necessarily give you the highest probability entries, doesn't give you the highest probability trades, because you're just you're trading in the middle of this churn here. What we would have liked is for the market to come down and given us an entry somewhere around the support level. So at the moment, we're kind of waiting for the market to pull back there. We probably won't get the entry. It'll probably obviously shoot up without giving us an opportunity to get long, which of course is frustrating. But you know what? That's kind of the life of a trader. You've got to make good decisions, and sometimes those great decisions turn out to be the ones that don't make you a profit. But in the long run, the important thing is that they will bring you out ahead of the game. So we know from our experience that trying to trade in the middle of this here doesn't necessarily give you the highest probability win. So we're going to sit and watch this next week. Maybe if the market gets down to this level, we'll take it on a shorter term time frame, maybe something like the 1 hour or the 15-minute, but we'll really have to judge it when it gets to that next week. But at the moment, even though it's bouncing off the level we've been talking about for the past few weeks, it's not something we are looking at. The second opportunity is the dollar CAD. Now the dollar CAD, if we zoom into the daily charts here, what I want you all to start to take note of is the price action, is the harmony in the charts. Now, the dollar CAD looks like it's going to go long. We've been talking about it and saying that we're looking for a long opportunity on this for the past few weeks, which is fine, right? The only problem is that look at what's happened with this price action here. Whereas we were talking about it a few weeks ago, it's just sort of pulling back. We thought we'd have a nice narrow range there. Ranges like this here. So if we look at this pullback over here, see that's quite narrow. If I just put that in there, that's quite a narrow range. So you've got a nice risk reward there. Again, this over here, if we were to bracket this range here, it's really quite nice and narrow. And then we get to the top here and we've got these big candles in either direction. So we don't quite know who's in control. So whereas we've got this big bodied green candle over here, prior to that, you can see you've got big-bodied red candles. So there's no real indication as to who's in control, and that for us spells a little bit too much risk. It's not that we don't have to take the trade, and if we don't feel confident in what the outcome's going to be, then potentially we'll pass on it. From a fundamental perspective, we now believe that the dollar CAD, or the Canadian dollar, has reasons to turn around. So whereas it's been getting sold over the past few weeks, past few months even, due to lower oil prices, we think that the oil prices have bottomed, and we potentially, if not see some sort of a mini rally, we'll certainly see oil prices stabilize. So the reason that this has been sold off, this has been such a good trade, obviously you've got the dollar strength, Canadian dollar weakness. One of those factors has now gone away somewhat, so that makes us a little bit more cautious about taking this trade as well. So from a technical perspective, it looks okay. It's not the best opportunity in the world. We're currently short the pound dollar. There aren't that many other opportunities on the table at the moment, but that's not a problem, because you know that if we have to wait on the sidelines, that's absolutely fine, because we're protecting our account, we're protecting our capital. You know, what you don't want to do is you don't want to get into a situation where you've lost so much money during, you know, the bad times, and when it comes to the good times, you've got such a great deal to make up to get you just back to even. So that brings us to the end of today's Forex Focus. As I said, I know there weren't a lot of opportunities to analyze today, but I think there's quite an important lesson there as well in terms of being disciplined, looking at the harmony on the charts, and really taking the highest probability trade. So even though it looks like both of those pairs that we talked about, the pound Aussie and the dollar CAD, could go long, from a price action perspective, it's not the greatest setup in the world. So, you know, it's one of those where you can either be in the market every day and have your account chopped up and die by 1,000 million different cuts, or you can wait for the highest probability entries. And even though they will be, you know, fewer and further between, you can, once you get those entries and you get good at them and you start to get, you know, your 70-80% strike rates, then you can work on increasing your size. But you can't really take greater size in any particular position if you've got sort of like a 40-50% strike rate, because it just doesn't make any sense. So work on taking the better entries, work on taking the high probability setups, and once you get consistent with that, then you can work on increasing your size. Okay, so I hope you found value in this lesson here. I hope you've enjoyed it, and I look forward to speaking to you on next week's Forex Focus. Take care now.